Today our discussion is on Quasimodo. Quasimodo. The Quasimodo is a reversal chart pattern forming at the end of the solid trend. It can be spotted on any time frame or any asset. It means you can find a Quasimodo on Forex, on stocks, on crypto, and on commodity as well. We have Quasimodo, bullish Quasimodo pattern. A bullish which is inverse Quasimodo occur at the end of a downtrend, and this signal a potential uptrend. It means the price at this particular time is ready to go higher. So it consists of three lows, that is a head in the middle and two shoulder at the sides, and two maximum where the second trough, that is the head, is the lowest and the second top is the highest. Image that we have here. Now you have a low. This is a typical example of a bullish QM pattern. You have a low. This low produces this high. You see, I'm hovering my mouse around it. When this high was produced, then this high produces this low. What do you notice? This particular low is lower than the previous low that produced this high. Then this lower low now produces higher high. This particular high is higher than the previous high. Then the market come back to the left shoulder. Then what happened there? You look for opportunity to buy from this neckline. It's from here you are going to buy. So this is a typical example of bullish QM pattern. Don't forget, the low will produce a high. That high will produce the lower low. Then the lower low will produce higher high. Then you wait for the market, the price will return back to that same level, the level where the first low was created, and you look for opportunity to buy. Okay, so the bearish Quasimodo is just an inverse of what we discussed in bearish under bullish Quasimodo. A bearish Quasimodo occurs at the end of an uptrend, and it signals the formation of a new downtrend. So it consists of three peaks, a head in the middle, and two shoulders at the sides, and two troughs. The second peak, which is the head, is the highest, and the second trough is the lowest. Okay, we can see this in this given chart. So what do you see here? You see a high. This particular high produces this low. This high produces this low, and this low produces this higher high. So this high is higher than this previous high. Then this higher high now produce lower low. You see it? Then the market return back to the high, which is a left shoulder. And at this point, we must anticipate the market to go down. So you can see, okay, why QM? Why is QM so much important? A lot have said, as a matter of fact, there are thousands, if not hundreds of thousands of videos on QM. The QM trading pattern is considered reliable, yes, because it is based on market structure shift, which indicates a potential trend reversal. So that is one of the reasons why QM is a reliable pattern. Now, another thing is the risk-reward ratio. QM setup typically offer high risk to reward ratio, like from 1 to 3 or more when executed correctly. Very, very important. When executed correctly, then you can shoot for risk-reward ratio that is mouth-watering. Okay, and another thing is that it works across time frames. Yes, this is one of the things that is so much interesting about this QM pattern. Now, QM is effective on multi-time frame, from scalping like your M5, M15, swing trading, H4 daily, and so on and so forth. As a matter of fact, even on your M1, the pattern, you can spot that pattern is virtually everywhere. Now, higher time frame confirmation increases its reliability. That is one thing about this QM. You can easily confirm using higher time frame, the next higher time frame to confirm if the QM will actually hold or not. And it gives room for further reduction of risk. Yes, it gives room for further reduction of risk. What that simply means that when price eventually return to the particular spot, that neckline where you are supposed to take your trade, yes, you can also go lower to another time frame to also look for QM in that side so that your risk will be minimal. Okay, now we are now on the chart. So I want you to pay attention. I have to mark some of these points down. This is Euro USD and this is 1 hour time frame. This is a price action. This particular one happened today. Yes, it's happened at this time of recording this video. Now, because if you look at this place, if you look at this spot here, we have the low. Now you can switch to, yes, you can switch to line chart. As a matter of fact, this is going to help you more for you to get it. So here you have the low. This particular low here produces this high. Then this high break down this low. So this was former low. This becomes the lower low. Then this lower low produces higher high, which is higher than this previous high. Then this particular high return back to the left shoulder. And what happened? Price was able to zoom off from here. Price reacted here and it went straight up. Now, if you want to measure that, that is about 106 pips. Whoa, that is a whole lot of pips for Euro USD. And of course, Euro USD is not among those highly volatile pair. So is okay. For instance, now, okay, one of the things I can personally do here, so now that I have this engulfing, I have this QM pattern now, the next thing I can do is to check, to confirm. Then to confirm, this is I'm on H1, then I can go to H4. What am I looking for when I get to H4? I'm looking for engulfing candle. If there is presence of engulfing candle, then I can be sure that this QM will likely hold. That gives me extra layer of confirmation. And what did you see? Here you see a bearish candle, then you see this. So this is, yes, this is somehow, for somebody, if you do not understand properly what the engulfing candle is, you might have issue believing that this bullish candle here can be considered as what? As an engulfing. But beyond that also, if you also look at what you have here, this is a failed engulfing. Yeah. So if I mark this particular spot now, then I reduce this. Yeah, what do you see? This was initially bearish engulfing that got failed by the action of this bullish candle. Yes, this bullish candle, I'm hovering my mouse over, failed this. So that makes the zone more dynamic. So that is extra confirmation for me to know that this QM is going to hold. Now let's continue. So if I go to, yes, still on this particular spot, so what did I see? I spotted another QM. Now in this case, so if I switch to line chart, you're going to see it. Now you see, this is the high, and this high produces this low. This low produces higher high, and this higher high produces lower low. Price eventually return to this particular spot. But what happens here? You can see when price returned to this place, it was even able to, to sweep the liquidity on top of this. So price, if you are someone who love to sell pending order, you set your pending order here, and of course, you will most likely place your stop loss somewhere here. What will have happened? Yes, the price will have come to this place, sweep you off, take your money, and you now say, oh, it seems this QM is not working. It's actually working. So one of the statements I made at the very beginning of this video is that within this place, you can also watch, you can also do something. So if you didn't get that part, you can go back and watch it, because QM provides you that opportunity. As the price comes to this particular spot, you can go to lower time frame to also check for QM at this particular spot. You will definitely see it, and you'll be able to take it. So that means you won't be caught. This particular spike that took away this liquidity, you won't be caught in that web. Okay, so here we have another one, another QM. QM is everywhere. This is 1 hour time frame. If you go to 5 minutes, if you go to 1 minute, you will see QM. Now you see, now what do? I switch to line chart. So from line chart, I can see clearly this is low, this is high. This high produces what? This lower low, and this lower low produces high. If you put, now if I use this now, you see what I'm saying. You see it, that this particular high is still higher than this. So that's what QM is all about. And this particular one return to that zone. You see it? It returned to that zone. And what happened? Price starts going higher. So let's check M15. Let's see it. You need to, this is one of the trusted, most reliable pattern in the market, but you have to train your eyes so that you can easily spot it. Is one of the most reliable pattern. Okay, like this particular one. Yes, this particular one. Yeah. Okay. Yeah. Okay, this one is, yes. Uh, I got this one particular one, and okay, I traded it today. Now, what do you see here? Yes, I saw the QM. Look at it. Here is the QM pattern. I spotted it. Spotted it. So if you turn to line chart, you see it. You see it. High, low, higher high, lower low. Price return. So when I saw price in the earlier hour of today, when I see price was moving up here, I know, oh, price is definitely coming back to this particular spot. So from here, all I did was to go to lower time frame and look for another QM. Yes, which of course, there are, apart from QM, there are several confirmation you can use, but I didn't just set pending order here because I don't know what the market would do. So market might come here, spike, and take off liquidity of this particular high. Then, and of course, if you set pending order here, this place should be your ideal stop loss. But of course, it's still not 100% safe, because price, it took a while before price. That is another thing you must take note of. When a QM is created, you must ensure that you want to see that QM is retested as soon as possible. But when it's taking too long, price might have changed his mind, or there might be some sentiments, some activities happening in the market that will warrant this QM not to hold again. Yes. So to have high success trading this pattern, you want to quickly see that the QM is price come back to it as soon as possible. But when it's taking too long, look at this H4 candle. When this particular QM was created, you have this. Okay, it got created when we saw this particular one, this bearish engulfing here. Now let's now look at count the number of candles before it finally return. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Can you see that? And each of these candles represent 4 hours. So 4 times 12, that is about 48 hours. It took 48 hours before price eventually returned to this particular spot. So it took really a long time. So you wouldn't know if price actually activated something at the bottom here that will make it as it's going to sweep liquidity of this place. So that is why you don't just set pending order here. You have to go. That's my approach. Of course, there are several persons, as a trader, everyone has their own unique style of trading. So, but for me as a person, as a trader, and those in my community, what I recommend is that when price return to this place, you go to lower time frame to check, So when you are now satisfied with what you see, then you can enter. But don't just set pending order here. Of course, if you do that, you can be right 40 to 50% of the time. I can assure you that. You can do back test of it, what I'm saying. You can be right 40 to 50% of the time. You can be right because Quasimodo is one of the strongest pattern that you can see in the market. One of the strongest and most reliable. So it's so reliable. Yes, except if the market maker, the market maker, as of course, market maker will always come with their own style, will try to manipulate the price. And that is an example of what we saw the other time, that price was able to, sweep liquidity at the top of the head of the QM and eventually price what? Eventually drop. So such will happen if you set pending order. You can be, of course, you will still have good trade. But just that, sometimes when you set pending order and most of the time when you come and you see that maybe out of 10 trades, you are able to, 5 trade goes in your direction and consecutive price will get to that spot and take you out before eventually go your way. One of the things that will do to you is that it's going to reduce your confidence. And one of the things that you must not joke with is your confidence in your trading system. It's not that now that you are confident that this is what my trading system. That does not mean you will now throw off money management. Of course, money management is one of the key things for you to remain in this market. But what I'm saying now is when price return to this place, if you set a pending order and maybe out of maybe 5 trades, you were taking off like 2 times. Of course, you wouldn't want to set pending order next time. So as a matter of fact, you might be considering, I'm not sure that this pattern will work for me. Let me look for something else. So that's why I always recommend when price return back to the left shoulder, go to lower time frame to consider to see if the lower time frame has also shifted, is ready for the market to go down. That is one of the ways to be on the safer side. Okay, QM works all across forex pair, to trade crypto, it works. Okay, let's go to gold. Let's go to gold. Okay, okay, okay. I'll mark few spots here so that we can, yeah, I think it was M15 or M5. Okay, okay. So I mark these ones. This is gold. So I've marked this particular spot. You see now, this is, if I switch to line chart, this is 5 minute time frame. And that is, we said, from the introduction, I said that even even H1, even 1 minute time frame or 5 minute time frame, you can also spot this particular this 5 minute time frame. And you see, when price eventually return, this is highly volatile pair. So your stop loss will have been somewhere here. These are height of the same. So I will rather place that if I'm not going lower time frame to check and put it like 30 pips or so. Then look at the number of pips it gives. This gives about 120 pips. Because the QM is a pattern you must not joke with. As a matter of fact, after watching this video, take your time to check the pattern and make sure you do a lot of the more you check it, the more you mark it out from your chart, the more you get used to the pattern. Look at this one also. So if you switch, one of the things that will help you is switch to line charts. So here we have a low that produces a high. This high produces lower low, and this lower low produces the whole of this high. So price actually return somewhere here. The reason you have this particular one is because of the action of price at this particular spot that make it look so. But we expect that this this lower low must produce a high that is higher than the previous high, and that's only see a price return. When price touch here, see what price started doing. Price started going up. See, let's go forward. Okay, also see this. This is also a QM. You see it? You see high, low, higher high, lower low. Price retest it, and what happened? You see, price keeps falling down. So, sorry. So, if you measure this now from here, what do you see? It's over 270 pips. You see it? So QM is a strong is a strong pattern. So you need to look at this one. Uh, you need to inculcate it. You see, this is a high. This is a low. This low produces high. This higher high. This higher high produces lower low. That's lower than this previous low. And price return to this place. Now, the reason why you have to switch, most of the time you have to switch to this thing is that because there are some examples that are like, I would say, like the textbook. They look exactly like the QM we saw initially from what was shown to us. But one thing you must know is that you will not, it is not in all cases you will see that typical example of QM. Yes, it is not in all cases. As a matter of fact, more often than not, you are going to see more of those ones that do not look like the QM that you are looking for. But what will help you to see it clearly, it is this line chart. So when you spot it and you are not too sure, switch to line chart. When you switch to line chart, you are going to know whether it is a QM or not. Okay, this is another QM. This is a high that produces a low. This low produces a higher that is higher than this. Then this high produces a low that is lower than this. Let's switch to QM. You see what I'm talking about. Can you see that? High, low, higher high, lower low. Price return back to this place. And what happened? Price dive down. So let's try to measure when price return. What do we see? This is over 200 pips. And mind you, this is just what? 5 minutes time frame. So it's everywhere. Look at this one. Look at it here also. This is a QM. This is a QM. You see? Let me switch. You see it? This is a QM. High, low, higher high, lower low, price return here. So uh, one of the things that will help you is line chart. You see it? We still have another one. Yes, you see it. This is high, low, higher high, lower low, and price return to this place. And what do? You can set a pending order. Depends on the kind of a trader you are. But if you are extra careful trader, a trader that love to do due diligence before you take a trade, who is not just a random gambler, so you can still go on M1 to see what is happening as price return to this place. Then that will give you an extra layer of confidence to take the trade. So if you are not been trading using reading the market through the lens of QM, you can start looking at the charts now. I tell you, from what you have seen so far, you can see that this thing really works. So it's not left for you. Then you need to train your eyes. What that means is that watch this video over and over again, see the way we're able to mark it, and see that you include the same thing. You can spot QM on 1 minute time frame. Of course, if you are a scalper, then you want to start looking for your QM from the lower time frame, maybe from M30, M15, and M5. But if you love to hold your trade at least for some hours, so you look for your QM from either 4 hour or 1 hour. So very important. So QM is such an awesome pattern in the market that you should not joke with. And if you are new on this channel, kindly subscribe and turn on the notification button. If you are a returning viewer or you're a subscriber who just returned, do well to check all the videos we have. You see, while I was discussing this, I said something about engulfing, how we use engulfing to determine. Look at this now. Okay, let me just chip in this, although this is a premium content, but let me give you this. Now look at this. Now I have spotted this QM. Now another extra layer of confidence that will boost me to know that this trade will actually, it has about 70 to 80% probability of going down. I will switch to the next time frame. This is, I mark M5, so I'm going to switch to M15. When I switch to M15, what am I looking for? I'm looking for an engulfing. Look at that. See the engulfing here. See this engulfing. You see this? This is extra layer of confidence for me. You see this engulfing and price return on this green. If you come here now, you see what I'm talking about. Yes, price return on this leg. Price actually return on this leg to touch the neckline. And what happened? Price has no choice than to drop. And when it dropped to this place. So price move from zone to zone. Don't forget that. Price move from zone to zone. So if you got value from the video, hit the subscription button and turn on the notification, and also comment, share with your friends, and also if there's anything you want me to talk about, any topics you want to know, or anything you want to know deeper, maybe from what I've said so far, you can comment below. So I'll read that and I'll make a video to address that. Thank you so much. Thank you for the support.